Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. It's a TGIF, folks. And not only that, it's a 3-day weekend, and hope everyone's going to have a great one out there. Let's take a look at one of our 4 agreements. Accept others the way they are. You cannot change other people. To try to change them is to fit what you want them to be. It's like trying to change a dog into a cat or a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We had the Dow Industrials up 90, NASDAQ up 17, S&P's up 8, gold contract up $36. That's an ABC structure on the way up to 1720, folks. Takes the B out with conviction. Silver up $1.26 at 31.71. Platinum up $29 at 1,538 an ounce. Copper up a penny at 3.45 a pound. Light sweet crude up $1.88, trading out at $96.50. Bonds up a full point at 150.22. The bond is going after its high of 153.11. King Dollar got some whacked around price-wise here. Volume, light volume. It did reject the lower price, but when we go through this, it's pretty amazing. We're at 81.22. Euro is at up 75 ticks at 125.81. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Where are you at? We are at 1407. And guess what, folks? We were at 1411 last Friday. Bottom line, nothing has happened. But let me tell you something. If you were in the market today, this was like one flew over the cuckoo's nest today. We had volatility in spades. What was that all about? Well, what you had is that first off, you had the market up a good 120 points before the open. And then you had Bernanke come out at Jackson Hole. And as Bernanke came out, he was explaining what the Fed has done for the past 4 years, and what they felt they have accomplished, and what they felt in the future very well, may come down the pike. Bottom line is that there was no QE3 in any of that. So what you had market-wise is that we started out with the S&Ps up $14. As soon as you start talking, they go all the way down. They're up 1. We come all the way back up again. We get to a price point of the 14.14. You come back down again to 14.02, and we close out at the 14.04 level with no volume once again. That's in your S&Ps. The Dow Industrials, we take a look at the Dow Industrials, what you have with the Dow. The Dow got to a price point of 13,151. And the low was the 13,000 level. It's pretty amazing, actually. It's not amazing, but that volatility was wild. And we're at 13,090. Haven't moved. That's the bottom line. In fact, we actually closed below yesterday's high, which is pretty wild. The NASDAQ composite. So what you have with the composite is this. Composite does 1.3 billion shares. The S&P, by the way, folks, that did 591. Composite, she's up $18, flat day, really, though. We've been the same place now since August 16th. So you get the end of the month, so that's a full 2 weeks at the exact same place. No juice on the top side. 1.3 billion we did for the NASDAQ to basically break top side. You're talking volumes, you need about 2.2 billion. Now, let's go over to the gold contract. What gold did here, gold took off in spades intraday, did 174,000 contracts. On the daily basis, took out the B point of 1679. You're trading out at 1693, and let's say it wants to go up to the 1720 mark. That's on the daily. Now, on the weekly, it's a little bit different. On the weekly, what it is doing is that, let's see. Yeah, it's 1,800 up there. It's interesting. On the weekly, it just doesn't have what it needs just yet. We'll see what kind of acceleration it gets next week. But there's no doubt on the daily, the dailies are there, and they're there in spades. If you take a look at the GLD did 17 million shares, takes out the B point. We did 17.9 million shares. The B point had 17.2 million shares. Big acceleration up. Now, bonds. Let's go over to take a look at the bond market. What we had with bonds is this. Bonds basically would not stop moving, folks. They were moving when the Dow was up 120. They were moving when the Dow was up, $35, $40. Bottom line is that this little baby bonds just kept moving. So we're at 150.23. The highs in bonds, folks, are 153.11. It's going to make a run for these highs. What you had out here is that you broke the downtrend that had been in place since the 25th of July. So we'll see how it goes attacks those highs. Okay, now dollar index. Let's go over to the dollar. This is what you have with the dollar. Dollar index has 24,000 contracts. That's coming into approximately, I think it was 40,000. Yeah, 42,000. Okay, so it didn't have the juice, but this is what it did. They crushed the dollar. The dollar got down to 80.96. First acceleration up, came up somewhat. Bottom line is this. This is really wild. So the swing point, folks, is at 81.220. Well, guess where we are? We're at 81.220. So we'll see what happens Monday morning. But you're right at the swing. So we got below the swing, which was at 80.96, and it closed right at the swing. So we'll see whether it can get back inside the range. I suspect it's going to get back inside the range. Why? We go over to the euro. Let's take a look at the euro. What you have with the euro is this. The euro closed at 1.2583, and the high, now this is where it gets wild, the swing in the euro is 1.2590. So it missed it by 7 one-thousandths. That's what it missed it by. Now, let's go to Europe, and this is one of the main reasons. We go over to Europe. Let's go to the FTSE. What you had in the FTSE today is this. Couldn't hold price. We closed out at 57.11, and at 57.11, we don't have the volume. Yeah, we do have the volume. This is going to get toasted and roasted. Okay, so you did 850 million. You're pushing into that swing low out there, which was the 5705. This little baby is going to try to push into its lower swing out here, which is 54.78. We go over to, and we take a look at the DAX in Germany. What we had in Germany is this. Germany also couldn't hold price out here. What we did have with Germany, both yesterday and today, is you had an acceleration of volume. And that's going to be interesting, because that means it's on a weekly basis it's going to have some juice too. On a weekly basis, it's not that bad. On the daily, folks, on the daily basis, you have that acceleration of volume. The DAX right now is at 69.70. We'll see 69.70. Okay, so it has to get back inside 68.55 in order to get to lower price. Some of the high volume stocks in a low volume market. This is what you have out here. Well, I might as well come back to the United States since I'm in Germany right there. Okay, so what you have is this. You had Bank of America was up 8 cents. Microsoft was up 50. We had, let's see, Ford Motor Company was up 3. We had Oracle up 47. Altria Group was down 48. Facebook, you talk about getting toasted and roasted. It's making its way down to that $13 ABC structure on the way down. Facebook came down $1 today. It was trading out right now at $18.05. And, okay, so what did Bernanke have to say? What Bernanke had to say, folks, is this, is that, so you have the conventional tools that the Fed normally uses. Those conventional tools, meaning you bring interest rates, you bring interest rates down, you bring them back up. That was their tools prior to 2007. After 2007, the debacle on the way down, what do they have to do? It was a new playbook. That new playbook had to do with buying mortgage-backed securities, had to do with buying long-term bonds, had to do with bringing the rates down as quick as they can. He said that he felt that there has to be more work done in the future, but they felt they had a good handle on their balance sheet, and we'll see whether they can reduce that balance sheet. He wasn't talking about reducing it right now. He's talking about what techniques they use to either bring it up or bring it down. You stay right there, folks. We're coming right back.